US stock market seems to have stabilized since our last report. In today's report, we would like to address what fundamentally seems to be driving them, with a small comment for Boeing and Intel, and also mention the earnings season which is about to kick in, and finally conclude our report with a technical analysis of Nasdaq's daily chart. The US employment report for March came in hotter than expected on Friday. The data tended to highlight the resilience of the US employment market and seems to provide some leeway for the Fed to maintain rates high for longer. Yet the market shook off any effect, and it's characteristic that US stock market indexes ascended higher for the day. Hence, we highlight the release of the Fed's March meeting minutes for later on today. Should the document show that the Fed policymakers are hesitant to start cutting rates, it could provide some bearish tendencies for US stock markets. Before that, we note the release of the US CPI rates for March and a possible failure of the rates to slow down or even a possible acceleration could add pressure on the Fed to keep rates high for longer and thus weighs on US equities. Furthermore, we note that on Friday the earnings season kicks off with major US banks. We tend to view the earning releases in an aggregated form also as a gauge of the health of the US financial sector. On a corporate level, we note the headlines regarding Intel's new chip. The company's latest AI chip is called Gaudi 3, and the company stated that it is twice more efficient power-wise and can run AI models considerably faster than competitors NVIDIA's respective chip. The company also mentioned that the new chip was tested on AI models of Meta among others in order to verify its effectiveness. The news are practically part of the NVIDIA's Intel rivalry to dominate the fast-moving and highly competitive semiconductor sector. There is a relative frenzy of the market for AI as well, hence anything including the AI initials tends to get lots of attention and put a plus sign in front of the relevant company's share price. Hence, the news could be considered positive for Intel and halt the downward motion of its share price in the past few days. Boeing's crisis seems to be deepening with another incident where the cover of a Boeing 737 engine was detached mid-flight. Furthermore, a whistleblower claimed that Boeing knew of the safety flaws concerning one of its largest aircraft carriers. The issue seems to relate to the 787 Dreamliner jet and has to do with the structural integrity of the plane that is currently under investigation by the Federal Aviation Administration in the US. In the latest news, Boeing CEO David Calhoun was summoned to testify before a Senate subcommittee about the company's airplanes, which tend to intensify the uncertainty for the company's outlook. Overall, we see the situation getting worse before getting better, and the drop of its share price may intensify. Nasdaq remained a tight range-bound movement over the past few days between the 17,800 support line and the 18,500 resistance line. We tend to maintain our bias for the sideways motion to continue as long as the price action of the index respects the pre-mentioned levels. Hence, to switch our current sideways movement bias in favor of a bullish outlook, we would require a clear breaking of the 18,500 resistance line, with the next possible target for the bulls being the 19,100 resistance level. Yet note that the R1 is an all-time high level for the index, which understandably may be providing cold feet for the bulls. Should the bears take over the reins of the index's direction, we may see Nasdaq's price action breaking the 17,800 support line, thus paving the way for the 17,160 support base that held its ground against downward pressure of the index's price action on the 31st of January. Thank you for joining us today as we navigated through the dynamic world of financial news. From all of us here at IronFX, we wish you solid trading.